Hello, and thank you for joining us for this weekly Outlook video here at XM.com. I'm Cristina Marucos. Joining me today is Senior Investment Analyst Rafi Boyajian. We'll be having a look at the week ahead. So we do have a busy week ahead, but let's start with the Fed meeting on Wednesday. It's the first of three central banks that is going to make its policy announcement coming this week. Although the Fed is expected to keep Fed funds rate unchanged, there's a lot of speculation in the market that a rate cut in the near future is a foregone conclusion. So what should we be expecting out of this meeting?
Well, the Fed isn't expected to make any changes in interest rates next week, but it's going to be very important what they signal for the following meeting in July and for the rest of the year. They will be updating their latest economic projections, and of course that's going to include the dot plot chart, which is where they expect interest rates to be in the coming period. Markets are expecting the Fed to deliver 2 rate cuts in 2019. If the Fed's forecast doesn't match that, we could see some strong reaction in the markets. It's quite possible that the Fed will not be quite as dovish as the markets are expecting, so everyone's eyes will be on that dot plot chart.
Mm-hmm. Now, moving into Japan, the Bank of Japan is expected to make its policy meeting this week. And even though the yen is holding strong against everything that's going on with the trade tensions and the market uncertainty, what should we be expecting from this policy meeting?
Well, the Bank of Japan has very limited tools at its disposal. Even though the Japanese exports have been badly hurt by the trade tensions between the US and China, and inflation in Japan is still very low, still below 1%. So Bank of Japan, all it can do at the moment is just reiterate that they're ready to act if needed, but it's going to take something very big for it to force to act given the limited tools at its disposal. For the time being, they are just expected to stay on hold and just keep insisting that, if required, they are ready to take action.
Mm-hmm. Let's move into the UK now. It's been a difficult week for the pound, given that the information released, the data released so far has been rather on the weak side. We're expecting CPI and retail sales data to be released this week. If those reports are not promising, how is that going to affect the pound?
We could see the pound coming under some pressure. Recent data has pointed to a deterioration in UK's growth in March, April. So if the latest inflation and retail sales numbers reinforce that view, that of course would further dash expectations that the Bank of England will be able to raise interest rates over the coming 2 to 3 years. The Bank of England will announce its latest decision on Thursday. They're in fact pretty much the only central bank that's saying that we're going to raise interest rates. Everybody has shifted to cutting interest rates. So markets aren't convinced by the Bank of England's stance. So if the data reinforces that view, we could see sterling being pressured a little bit, though the main focus will still remain on Brexit. We do still have that leadership contest underway in the UK for the next Conservative leader, and in turn, whoever becomes the next Conservative leader will be the next Prime Minister. The current favourite is still Boris Johnson. If he's elected as Prime Minister, then there's a growing risk of a no-deal Brexit in October, and that would weigh on the pound heavily.
Mm-hmm. And before I let you go, Rafi, what else is on the week's agenda?
We're going to have flash PMI numbers out of the Eurozone. They've steadied a little bit in recent months, and they're likely to stay within recent ranges for the month of June. So it's unlikely to give clear signals on the ECB's next action. We're also going to have the GDP numbers out of New Zealand. The New Zealand dollar was in fact one of the worst performers this past week on growing expectations of a rate cut by the RBNZ. So any weakness in those GDP figures would only fuel those expectations.
I see. Rafi Boyajian, thank you for joining me today. And thank you for watching us here at XM.com.